I do not have timing. How you doing, friends? This is 0 days to expiration, and this is the final hour show. And I don't think I have all the cameras set up correctly. Let's see. What does this one look like? That's not too bad. We have this guy over here. We can see the charts. There we go. Very good. And then we need to set this guy up here. That's number 4. We got that guy. Cool. All right, we're good. All right, so let me get straightened out here. What a mess. Oh my God. It's like I was living here or something. All right. I am ready now. All right, so what I wanted to talk about today was the methods that we use to reduce risk, or let me just put it a different way because you need the full context. When you should be looking to reduce risk and how you might want to do that when you're trading 0 DTE on the SPX or the SPX index, options on the SPX. And in general, there's really very few things that we have to do to reduce risk because our risk is well defined, because we take these asymmetric trades and the risk is very small compared to our potential profit, which is very large. And so the defined risk is our risk management. We shift the whole, I guess it's a high quality way of looking at trade management. We shift the treacherous and drudgery of managing risk and shift that the other side, because we no longer have to manage it, to managing profits. And so generally that's what we do. However, there are times when coming about I guess a positive situation. Let's see, what's the best way to put it? There are times when the market context is such that it makes it a little bit more difficult to come about consecutive wins or whatever, or you may have consecutive losses, or you may be moving sideways more than you're moving ahead, and you want to prevent any kind of drawdown that might be a little bit more than what you want. Now, drawdowns are one of the least things that we have that bother us in this particular strategy. However, you always want to try to minimize them. So just for an example, last year, my max drawdown all year was about 4.3%, 4.4%, something like that. And this year, my max drawdown has only been 3.25%. And so by all measures, if you were to look at any kind of drawdown target for traders, those are fantastic numbers. In fact, anything under 10% is considered great. And so by all measures, I am doing way more than great. And that's sort of built into this strategy because of our defined risk. However, we like to even go the step further because this is a relatively low win rate but high return strategy. That means that our win rate is not like a lot of other strategies that might have win rates up in the 90 or 95 or even 75 percentile. Now, those are kind of they have a hidden poison pill in them, to use the words that we were just using just a little while ago in the conversation. And that is that these high win rates do not have long-term positive expectancy. They do not have good long-term or good returns. However, the low win rate that we're practicing, which is generally around anywhere from 40 to 60%, so let's say an average of 50%, does have fantastic returns and very low drawdowns. So it's quite the opposite of the what at first glance, or the top line number, that win rate that a lot of traders look at, which they shouldn't be. They shouldn't be looking at that. They should be looking at what are the actual returns, are quite good. So, however, because you have, and let me just say that this is a huge advantage for us too, because our wins and relative to our losses are very large. Those small losses also are the benefactor of that, or the benefit of that is that we're never really in a mental state or an excited state or in a place where we feel anxious or panicked or anything like that. And so being able to avoid that kind of mental state allows you to stay in a state where your mind is clear, you can make thoughtful decisions, rational, logical, etc. And so that in itself is a huge benefit, and it's actually one of our best edges, besides the fact that we have other edges that are very clearly defined. So the only problem with that is that when you have a relatively low win rate, just by the law of averages, you're going to have streaks. Some of those streaks are going to be win streaks, some are going to be losing streaks. And then the other problem that can compound that is the amount of time that you might have to live with a losing streak. And so regardless of how big the loss is, just the fact that you're on that losing streak can wear at you. But you could step back and maybe look at a year's worth of trading that might comprise 220 or 250 separate trading days, and now that that 5-day winning or losing streak seems totally inconsequential. While you're in it, it doesn't feel inconsequential, regardless of whether or not it is just a small amount of actual loss. So there are things that you want to do to try to mitigate those things, or prevent that streak from maybe elongating. I think the longest streak that I've had so far this year has been actually 7. And now from my point of view, I don't particularly have any problem with it. It doesn't bother me at all. But I know that a lot of new traders do have a problem with even having three losses in a row. It like drives them nuts. And that's a real problem, because then they're not really looking at they're unable to see the forest through the trees is one way to look at it. They're so entrenched in that minutia that they don't actually see the big picture benefit. And so they can't keep that clear-headed. They lose part of that edge that we enjoy. And so what we need to do then is we need to do something that will even mitigate that small problem. And but there's only a few times that it's really worth doing it. And so that's why I said we have to look at not only the how, but also when that's appropriate to do that. Because for the most part, it's it's quite common to have 2, 3 losses, 4 losses in a row. Every once in a while you get to 5. Worst that I've seen is 7. But on the contrary to that, also see 2, 5, 7, even 9, or even 11 wins in a row. So you have to know that just by the law of averages, that eventually you're going to have potentially 2 weeks of losses in a row. That could happen. And still, it's not going to be that big of a deal. However, it will be a big deal in terms of, like I said, the edge that we enjoy, and that is the knowledge that, yes, our losses are small, and we can withstand them, and it's no problem when we're hitting that cadence of, 2 wins here, 2 losses here, 4 wins here, 3 losses there, 1 win, 1 loss, that sort of thing. And it's never really big, or within any particular week, you always have at least 1 or 2 wins that completely outshadow the losses. And that's generally how it goes. So what we do when we're in certain markets that seem to have a higher degree of losses associated with them, we identify those markets, and then what we do is we get small, is really the best way to put it. It's very similar to how you would do it if you were playing poker, and you feel like you're going on tilt, or you get a bad beat, or whatever. Your stack is getting small, and you want to be able to protect that. You're out of position, etc. You get small. You reduce your bet. You reduce your time in market, and you reduce the risk. So the times where you have to do that sort of thing in this strategy, at least this is what I've found, is that not so much in the bull market like last year. I don't think I ever had more than, you know, 3 losing days in a row for more than a year, and that's just the way it was back then. And sometimes I would have, 2, 3 weeks, 4 weeks of winners in a row. But I don't think that had as much to do with the strategy. It may have something to do with it, but it had more to do with the kind of market that we were in. It was just a bull market. You just buy the dip and and you go long. That was about it. And but in this market, it's quite different. Now in a pure bull market where you're coming down, this strategy actually performs quite well, almost as well as you do when you're in a bear market, when you're just coming down. This performs almost as well as just being in the bull market. It's when you have the bear market rallies that seem to be the real challenge. And so those bear market rallies are what we need to recognize, and then that's when we decide to change our strategy a little bit, so that in the event that we have these, now there are 2 strategies that I can see deploying here, so that when you detect that you're getting to a bear market rally, one of the things that seems to throw us off our game are these intraday reversals. So for whatever reason, during these bear market rallies, you seem to have a lot of this volatility and intraday reversals, and sometimes 2 or 3 of them in a day. And today is a really good description of that. We've had 1, 2, 3, and working on our 4th intraday reversal. And so that's really the problem, because that makes it very difficult to choose a direction and stick with it. And then you're looking at, okay, we only do 1 trade, but we've come up and down, and I don't know whether or not this trade's going to be positive or negative. It's too early to get in, or too early to exit the trade, and it could be moving away. It's just a pain in the butt. So there are 2 ways that you can mitigate this. Like I said, the first one, as I said, is to get small. And the way we get small, there are a number of ways. One way is that we can reduce the width of our spreads. As you know, we only trade butterflies, symmetrical butterflies. So if you reduce the width of your spread, you get into a spread that has much less cost of initially getting in. So the less you bet, and the more potential, or the greater the risk to reward, that seems to work out okay. You may not win quite as much, but your losses are going to be so super small. And then when you do win, it feels very satisfying, because instead of going for a 1 to 7, or you might be going for a 1 to 8, or a 1 to 12, or 1 to 15, and for a very small amount of money, you could potentially make a lot. And so, and then on the downside, if you have consecutive losses, it doesn't feel so bad. With that strategy, you can also put on more than 1 at a time, because you'll always be staying, because you're betting so little, you're still staying well under your max position size. So that would lead to the second one. I mean, if you're not going to just trade 1 strategy, you could trade multiple times in the day. I mean, if one reversal got you out of a trade, maybe you could try the trade, instead of a bullish trade, try a bearish trade. But when you do that, I think that you actually open yourself up to a little bit more risk. And so I don't know that that's the best way. The getting small is probably the best way to do it, but there are other ways that you can get small, and that's to change asset types. So instead of trading the SPX, you could go to the E-mini S&P futures, which is marginally smaller than the SPX. But probably the easiest way is to go down to the XSP, which is the micro version of the SPX. It's only 1/10 the size. And so you can get down really, really small. And then the interesting characteristic of the XSP is that you actually improve your probability of profit a little bit, because the ratio between the cost of the trade and the max profit increases dramatically compared to the SPX. And so what that does is it allows you to cover the same space in terms of at expiration, in terms of width. However, the profit curve tends to widen out a bit. And so now you have the ability to make profits further out from the body of the fly. So that's another way that we go about doing that. I mean, you're not going to make huge headways with that, but it's certainly a way that you can, like I said, mitigate those consecutive losses. So one is that your probability of profit goes up a little bit. You're not making as much, but your chances of making something at least are better, and your chances of losing less are also better. So those are all positive things, and that can kind of stem the streak that you're on. And that's one thing that you have to kind of come to grips with, is that in a trading system and in trading in general, there's enough randomness in there that it's very difficult to say that, hey, I'm deterministic on all my trades. You don't know. But one thing that is for sure is that streaks tend to persist. And so that when you're in a losing or a winning streak, they tend to persist. And so it is usually to your benefit to go with that, right? So if you're in a losing streak, you assume that it's going to keep on losing. So do something to mitigate that. If you're in a winning streak, you assume that it's going to keep on winning, and you can lean into that, right? So those are both valid strategies. So that is really the crux of what I wanted to talk about: how you actually mitigate losses, or what was the way I put it? Mitigate risk is the best way to put it. But there are under certain conditions where you have to do that. Most of the time, we just follow our strategy through and through. Just play the same way, same basic criteria, do the same kind of analysis, all of that. And that has enough variability and adjustability into it that keeps us in the game with quite well. But those bear market rallies, I haven't figured out the formula for those yet. But I guess I have. I mean, the formula really is just to get small, and you work your way through it until you catch that gear again. The important thing is that you keep skin in the game. You don't just sort of retract and say, "Hey, I'm not going to trade." I mean, that's a valid thing to do, is to not to trade. I mean, there are sometimes, even during bull markets, that there are days where you just don't see an opportunity. Particularly when you have very low volatility days and the liquidity is not there. That could be a case even in a bull day where you just don't want to trade, and that could certainly happen in a more volatile day or in a bear market, where there are just days that you don't want to trade. Now, before this year and last year, we only were trading 3 days a week because that's what was offered on the SPX. And then as of May, they started to go 5 days a week. When we had the 3 days a week, we had that certain type of cadence that we had in trading, and that seemed to give us a better perspective on things. And I think that not trading quite as much was actually a benefit. But that might not be that much of a benefit if you're in a bear market and you still have that same kind of odds making there. If we had 3 days a week and we had to go 5 or 6 or 7 losses, you could potentially be going not just 1 week, but 2 weeks of losses. Again, even though it's small, the time component can bear on a person's mind. So again, to get over that, I think that actually increasing the activity a little bit, maybe taking a few extra trades, or taking much smaller trades that are closer to your work and have a higher probability of profit, even though it's a small profit, is generally a good way to break up that potential. So there you go. Put that in your pipe and smoke it. All right. So now it is time to do a roll call. See who's here. And hopefully that was helpful. All right. We have Brent here. How you doing, Brent? And hello, hi, and howdy. Oh, we got the triple hello with different vernacular from always mixing it up. We have Jim S. Nice to see you. Landon Sims. I I know what wasabi is, but I don't know it as a greeting. Is wasabi a greeting? That's what I need to know. Is wasabi a greeting? It is a great condiment to sushi, but is it a greeting? Giannis is here. How you doing, Giannis? Nice to see you. And Tim Dodds. Yes, thank you, all veterans. And I want to say something about veterans. Although I am not a veteran, my brother is, my dad was, my uncle, both my uncles, just about everybody in my family were veterans except for me. I had a chance to be a veteran, and I blew it. I actually had an appointment. I had both a congressional and a presidential appointment to the military academies, to Annapolis and West Point. And I went there and saw how they were treating the plebes. And I turned to my mom and dad and I said, this ain't for me. Take me home. So I had my opportunity. And maybe I wouldn't be standing here right now had I gone down that route. I might have been a very different person, a very different person, I'm sure. But I have tremendous respect for veterans. And in fact, one of my favorite charities that I give to, and I encourage you to look at this, is Canine Warriors. And what they do is they provide service dogs for disabled vets. And in fact, what I do here at 0-DTE is I take a portion of everybody's, when they sign up here, I take a portion of those proceeds and I send that off to Canine Warriors. So that's what I do. I guess that is my penance uh, for not having the same kind of vision that I have maybe now, that I may not have had when I went through the whole Actually, it was quite a process to get an appointment to the military academies, and after doing that and then just kind of throwing it away, I saw the disappointment in my dad, because he was a master sergeant in the Air Force. And yeah, that's my story. Anyways, thank you, veterans. And hey, Will Do, how you doing? Nice to see you. And Stephen, how you doing? Happy Friday. It is a good Friday. Rob Fresno, thank God it's Friday. I'm one of those people that says, I wish we had another day. And I love Mondays because I love doing this. It's great. Yanis, Ernie, is trading the E-minis outside increasing your probability of profit? Given the usual lower volatility environment of RTH. Why am I missing what RTH is? I'm not like, I don't like hold on to all these acronyms. I don't really follow all that stuff. Maybe that's unusual. I'm sure if you told me, I'd say, oh, yeah, of course. So maybe somebody can tell me what RTH is, then I'll answer the question. Badam, how you doing? And Jamie, nice to see you. And Philippe is here. Philip, I'm sorry if I mispronounced that, Splinger. And Rob Boblega. That's a tongue twister. If you say that 10 times fast, Rob Boblega. Say that. I guarantee you can't say that 10 times fast, even if it's your own name. Maybe you can if you probably practice it. Oh, wasabi is was up, maybe. Yeah, I don't know. Max Virtual's here. How you doing? And yes, is also wants to thank the veterans. Don H, Idaho neighbor. Regular trading hours. All right, so now I have to go back there and then regular trading hours. Why do people use all of these acronyms? Because I'm kind of like this plain spoken guy. I just tell you right out what I think, and that's it. No, it's hard to misinterpret what I say usually, unless I start explaining a strategy or something. But I try to, okay, regular trading hours. Okay, now everyone's telling me. Everyone knows but me. Why is that? Um, Haha, it's an old Bud Light commercial in a sushi restaurant. Wasabi. Oh, of course, I remember that. But I don't. Is that what they said? Wasabi instead of what's up? I don't. That's what I don't remember. All right, now we have to go back to the question and read it again. Ernie is trading the e-minis outside of regular trading hours. Okay, now we have all the context. Increasing your pop, given the usually lower volatility environment of regular trading hours. I don't think the lower volatility environment gives you any greater probability of profit. And so trading the e-minis outside of regular trading hours, does it give you an increased probability of profit? I think it's more situational. I mean, the reason why you would trade outside of regular trading hours is so that you can gain a certain advantage due to events that might happen, right? So futures trade virtually around the clock, except for between 5 p.m. and 6 p.m. Other than that, they're going. They start on Sunday night at 6 p.m. and then every day they shut down between 5 and 6, and then they end their week at 5 o'clock on Fridays. So as opposed to being in during regular trading hours, which it's a very narrow window of time between 9:30 and 4 o'clock. So things happen outside of those trading hours, even during the trading day. For instance, a lot of economic reports come out early, usually between 8 and 8:30. And so you have that 1 hour time difference in between the time a report comes out that could be market moving. And obviously, and usually if it is market moving, it will get reflected right in the futures prior to the market opening. So you could, in fact, get ahead of a market open move and get into a trade at a better price, and then get the follow through as it goes into the market. So that's the advantage of futures there. You also have, a fairly impactful international market that's opening up in the early morning, and that's the European market. Opens up at 3 a.m. on, in my terms, in Eastern time frame terms, at 3 in the morning. So, although it doesn't have nearly the impact of opening up on the New York exchange, it still can be quite impactful on futures contracts, whether it's the E-mini S&P or gold or even treasuries. So a lot of things can happen overnight. So by having that expanded time frame, you can take advantage of those potential binary events or even news events that happen. So that's the only reason why I liked trading this particular strategy with the E-mini futures, was because we were able to take advantage of those binary events. It really didn't have a lot to do with liquidity or anything like that. I mean, liquidity with the futures products isn't really that big of an issue at all in the off-market hours. You might think it might be, but it really isn't. Particularly the ES or any treasury. I mean, you can put on. Let me put it this way. I could put on any size that I wanted in a treasury futures at any time of the day or night. And when I say any size, I'm talking as big as $10 million positions or bigger at any time. 1 o'clock in the morning, 3 o'clock, 4 o'clock in the morning, 11 o'clock at night, didn't matter. Half a tick of slippage. That's or a tick of slippage. That's it on big positions. Right. With the E-mini S&P, I never put on anything quite that big. But again, hardly any slippage. Gold has a little bit of slippage, early in the morning, but still, even that, not that bad. Oil, yeah, you can trade that just pretty much around the clock with minimal slippage. And of course, when you get into the US market, everything tightens up even more. But yeah, as far as liquidity, I've never found it to be a problem. I mean, there are certain times of the year where liquidity does dry up under certain circumstances, and maybe before certain events, or that sort of thing. But for the most part, liquidity is always there. It's pretty amazing. And for a retail trader, it should never be a problem. And if it is, you're doing something wrong. So hopefully that, and I wouldn't call it necessarily a lower volatility environment because it can get pretty nasty. Um, yeah, and what Max is saying, yeah, like the CPI yesterday at 8:30, the market went up 100 points before the market even opened. In other words, the E-mini S&P went up. So in response to that, so binary events like that are certainly things that if you could take advantage of them, you can really make out. Of course, a lot of it is guesswork because you don't really know what that binary event has in store for you, whether or not it's going to produce a positive or a negative result. Unless you're on trading. What is that? What was the Eddie Murphy and Dan Aykroyd movie? Is it Trading Futures? I forgot what is that. What it was? Coming to America? No, I can't remember what it was. Man, why am I drawing a blank here? But anyways, they got the advance notice on the orange juice report. That doesn't happen too often, if at all. Getting the advance notice on anything. So you don't have superior knowledge. You have to wait and trading places. Duh. Yeah, I don't know why I was blanking out on that one. Thanks. um, yeah, so you're not going to get any superior knowledge there, not unless you're in a very, very special situation. And then if you do and you get caught, then you could be in big trouble unless you're a congressman or a senator. Then there's no ramification whatsoever. You can make as much money as you want illegally. Crazy. Um, yeah, so trading futures and trading places is awesome. That was a great movie. Love that movie. The I don't know why I get Coming to America and Trading Places mixed up sometimes. I mean, they both involve Eddie Murphy. Did they have any other common actors in that? No, I don't think so. Um, but both great movies. All right, so here we are at 3:35. Let's go to the charts. Oh, I get the direction right this time. All right, so today is one of those days where we had these intraday reversals, and this is what I'm talking about. The market starts down and opens up down, and then immediately reverses up. Then it reverses down. Then it reverses up again. Those are tough days, and especially when these have a fair amount of range in them. So this had down as low as 39.50, and then up to, okay, so that's over a 50-point range right there when the expected move is only about 38 points. And then this guy here from 39.55 all the way up to here, right? So we're up almost 60 points or 55 points. Man, that seems like more. Let's see, 39.55. Oh, what am I talking about? 39. Yeah, yeah. It just seems like more. So 45, 55, about 55 points. So those are fairly big moves. The expected move today was only 38 points. So all the moves were bigger than the expected move, and they did it multiple times. Um, you know, how do you play something like that? Even if you played target one, which would have in the morning, actually, when I first put these trades out there and I suggested the stage trades, the trade at the top, target 2 is actually target 1. And after the market opened, or just before the market opened, when we had this move down, I declared this to be target 1, the lower, the bearish trade. So if you got into that trade, it looked great. You were heading towards the center, then all of a sudden it reverses. And then it reversed again, and now it's back down in here into the body of target 1. But it's still too early in the day. At 11:30, you haven't really seen any real profit. And then it just evacuates the area again. So you're wondering if it's going to hold on here for a while, because it went sideways for a bit, and then it finally breaks out. And so that trade is done. And you're wondering, hey, is it going to come back? Probably not. So that's the kind of trade that I'm talking about. And that happens a lot in bear market rallies. So those are the type of days that you want to probably, this type of situation. I mean, I've been basically going sideways, slightly up for the past 30 days or so. And I'm looking forward to when all this breaks out. It could break out at any time. I want to keep skin in the game, so I maintain positions, but what I do is I just get small. Now, with my trading here, and my personal trading is kind of distracted, to say the least, because of what I do in terms of running this group and providing support and doing interviews and live streams and all that. So I can't really concentrate as well on the market, but I'm still doing okay with this strategy. But today I couldn't put on a trade. I just didn't have the time. I had the time to do all the analysis and everything, but not to actually put it on and then feel comfortable with managing it. So that didn't happen for me today. But I do notice that a lot of people did get into mostly the bearish trade and a few into the bullish trade. So that may have worked out for some and not for others. For me, I probably would have gotten into the bearish trade, and then that would have been a loss. Although it was preceded by 4 wins, so that wouldn't have hurt that much. So there's that. But the preceding week to that, we had 5 losers in a row. Now my drawdown on that week was only 2%, so 2.5%. So it wasn't that bad. And then followed up with 4 winners in a row, which really elevates you. So that's the way it goes here. Those 4 wins completely outstrip those losses. Yeah, so that is really the struggle here. Now it looks like we're going to end up on a high note here. I'm just guessing here. But if we break through this LVL here and get up close to the session high, I think there's a good chance for us to move much higher today. And that was one thing that I had mentioned early on in the day. I said that the one thing that worries me about this market is the really tight market. When you have these really tight wound markets like you're seeing here, very, very tight, they're usually preceded by sort of a violent outbreak, or at least a lot of volatility, and then an outbreak. And so that's exactly what we're seeing here. Super tight range, and then some fluttering or chaotic movement, and then a breakout. And I think that that's what we're going to see here. I think going into this close, if we get up here and break through here, I think there's a good chance that we could see a run. And whether it's in the regular market hours, the RTH, or right after when the futures take over, I think that we're going to see prices shoot up. That's my guess. All right. Yeah, it says trading places and coming to America with the same era of comedy. And Beverly Hills Cop too. Remember that? There's another Eddie Murphy movie, all within that same era. Here, here. um, Likely profit taking for the weekend, right? I'm not sure. Imagine lots of longs in the market right now. Well, I would assume so after seeing yesterday's that people think that there's going to be some sort of continuation. And let's see, Philip says Tom Sosnoff made butterflies with only futures contracts, no options. Well, yeah, I mean the butterfly, the name butterfly, and it predates Tom Sosnoff. Well, he's a little older, so I'm sure he was around when it first came up. But the butterfly trade is a futures trade, right? So that's been around for quite some time. So it wasn't Tom Sosnoff. It was way, way before Tom. But like I said, he might. I think he's probably my age. I'm guessing. Maybe he's a little younger. So he could have been around when it was first concocted, but I think it was definitely before his time. All right, let's see here. So that's what we're waiting for. So now what we need to do is we need to go to the peanut gallery and ask them for their prognostication. Where do you think this market is going? All right, I'm going to give you my guess here, and I'm going to say we're probably going to close right at the highs at I'm going to say 40.10, but I think that we're going to go up higher afterwards. All right, Steven says 40.10. Got any more guesses? Come on. There are big prizes riding on this. Yeah, big prizes. Gold riding on this. um, I've been telling everybody that now, well, for the past month, that I think that now's the time to start dollar cost averaging into gold. And so far, that looks like a good move. I don't know if that will continue. All right, Gene Fritz says 4,000. Rob Fresno says 39.99. That's an interesting. That's like he's playing Price is Right. But see, the thing is, you can go over, you can be over the price and still be closer, right? So 39.99, huh? Oh, Max said the same thing. This is Price is Right. And Vadim says 39.90. Yes, a free zero DTE shirt. Um, oh, they're in the wash right now. I have some more coming that I'm testing out. I have a polo shirt with an embroidered zero DTE logo. That's going to be nice. And whatever I think is the best thing representing, and I also have a cap coming. So whatever I think is going to be the best to represent the service, that's what I'm going to go with. And it's such a nice logo. I think it's perfect for a hat, perfect for a shirt, very unassuming. And plus, it's that Zen swish, right? So who's going to look at the Zen swish and say, "Ah, you are you're a conspiracy theorist," or something stupid like that. All right, Tim Dodd says 39.97. He's all right, and Jamie says 4,000 would be nice, but I would jump up and down if we were anywhere between 39.90 and 4,000 and 4,010. So obviously Jamie has positions right there. All right, so we have to zoom in on this a little bit so we can get a better look at the volume coming in and out. So let me just say that if someone had taken the bullish position here, and I know that there are members here that did, and a lot of members have already gotten out of their positions with nice profits. But if someone had taken that position, they would be sitting very pretty right now. I'm sure of it. All right. Tim Dodd says 39.97, and Philippe says 39.86. Oh, he's not a believer. Oh, Jamie says that he's centered on 4,000, so he's right there. All right, so there you go. Jamie is one of those that took the target two trade. So yeah, that'll pay off big. And quite frankly, if you've been in it for any period of time, you better start staging those exits, Jamie. Do not let that get away from you. There we go. There we have a nice view of it. Oh, so he's already taken some off. He has the last one centered at 4,000. You are right there. So let me just give you an idea of what a butterfly that we take that is centered, and how wide is that, Jamie? So you probably said further back here. Is that only 10 wide? Is that what you're saying? Are you really in a 10 wide spread and it's sitting at 4,000? That would be pretty incredible. Oh, it's 20 wide. And what did you pay for it? So I'm going to guess that he paid probably $2.50, or between 250 and 275 for it. That's going to be my guess. So if Jamie paid, and I'm sure he's going to tell me very soon, let's say he paid 250, right? Yeah, he paid 250. All right. So here, let me do this. Let me do this here. All right. This is how you figure out your max profit on a butterfly. A 20 wide, that is $2,000 potential profit minus the debit. So that's 2,000 minus the debit, which was $2.50 times 100 is 250. His max potential profit is $1,750 on a $250 bet. All right, so divide it by 250 and you get the risk to reward. His risk to reward is 1 to 7. So every dollar he bet, he has the potential of making $7. That is, of course, if he stays right at 4,000. As he moves up and down, there's a little bit of gamma risk there. And so it's already hit the session high here, Jamie. If I were you, you're about 85 to 90% of the max profit right now. I would be taking that. That thing's got to be worth something. Well, maybe you might be able to give it one more. Let's see, you got 10 minutes to go. Yeah, there's probably another $200 or $300 left in that, isn't there? Maybe more. Maybe I'm way off. It might be way more. How much is left in that trade? Let's see. I don't have that over here. So Doc Russell says that I had a 20 wide at 4,005 this morning, got out too early, used the profits to get into a 10 wide at 4,005. I'd appreciate a rain dance for anything between 4,000 and 410. All right, so it's at $14 right now. Okay, so $14. So 14 minus 250 divided by 250. That's right now he's sitting at a 460% return. And it's looking actually pretty good. It went up and it touched the high of the day, then retracted. So pretty close. So $14, pretty close. So $14 plus 250. All right. You don't have very much left in there. I would be taking that. I would be taking that all day long. Take that now. Yeah. Listen to Steven. Take the money. uh, on that move down. If it goes down right here, should have taken it on that red candle right there. That little red candle right there. That's where you should have taken it. Here it's coming down right here. It might come down right to the center or not. It's going to jump. Every tick that it's going up and down, his profit is going up and down by probably $150. We're waiting for the report. We're waiting for the Jamie report. So one of the things that when you're going into a trade like this too, don't get stuck fumbling trying to put on the exit trade right at the very last minute. You should be there with a stage trade or two ready to go. Sometimes, if it's enough money, I'll have two trading platforms open at the same time with 2 or 3 stage trades in each, just to make sure that I'm going to get exactly what I need. The easiest way to do it actually is to do the pattern day trader hack. That's easier than trying to close. It's easier to open, I think, at this time. So there's less than 6 minutes to go. Will it drop? What is all that noise up there? That must be the dogs. I think the dog's pushing around something up there. Hey, what's going on up there? Oh, look at this. Yeah, hold on a second. I'll be right back. Who's making all the noise? Oh, it's the wife. It wasn't the dogs, it was the wife vacuuming. Did I give Jamie bad advice and have him get out early? Oh, geez. Because look at it now. It's like sitting right on 4,000. Jim says, holy donkey dung. Had I just hung on, I would have had my best day ever. Yeah. I hope I didn't give Jamie bad advice. Oh, heck no. Yeah, but it's going to fall. I don't think there's much more that you can get. You might be able to get another $100, $150. I don't know, man. Oh, that is such a hard decision. Although I have pinned once to 17 cents, so I'm one to talk. The worst thing that can happen is that, the last seconds, it could make like a 20-point move and then you're out with nothing. Oh, he is out now? How do you know? Oh, did he say it in the room? He probably said it in the room. Let's find out. No, I don't see anything. Not yet, unless you put it in here. Nope. Oh, look about 1550. Oh, I missed it. 1550. Man, you can't. Oh, sold it at 1550. All right. All right. Hold on. Yeah! Yeah! Sorry. I thought you wouldn't notice. All right. Well, we love to hear that. I'm sure that there are other people in that trade. Is there anybody else in that trade? It's hard to tell yet. Not everyone's reporting right now. All right. So Steven said I had a 10 wide centered at 39.90, but closed too early. Well, I mean, that wouldn't really be worth that much. Well, it's starting to be worth more. Right at the very end. Let's see. And is hoping for a 10-point drop right here. Jim says he left at 4 because he couldn't watch. These are high quality problems that we have in this strategy because it's so much fun when you get right down to the end. Yeah, I don't have. Is that the speaker for that? All right, that was the bell. I heard the bell. Pretty good. All right, another winning day for a lot of people in the group. Some people lost, and that's the way it goes. But I will say that this was my first target for the day. Then I changed it, and unfortunately I didn't trade. So if people followed my advice, they were shit out of luck, I guess. I mean, my second advice, if they followed the first advice, then they were doing great. Then I deserve something. I deserve nothing. All right. So it's not doing what I thought it might do. I thought it would for sure go up right at the end here. And let's see if it does that. But it really isn't. You know, it is Friday, so it could be well contained. Jim's looking forward to next week. Me too. I love Mondays. So the close to 3. Okay, let me find out what the close was. So the way we find out the close, we can find out the close on the S&P, I'm sorry, the E-mini futures by going to the fixing price for the CME. All right, so the CME fixing price. And that was at 4,023. Wow, look at that, almost right on 4,000. Now, where would that have been on? Let's see, do we have? I don't have my Thinkorswim up here. I have to go over here. All right, so 3993.05. 3993.05. It looks like that was the close. Yeah, pretty impressive. So 39.93, and what did we have for guesses here for the close here? Who was closest? Um, Philip says 39.86. It's within 7. Tim Dodd said 39.97, which is really close because that would have been 7. That would have been 39.90. And of course, Vadim also said 39.90 on the SPX. Rob at 39.99, 4,000, 410. So it looks like 39.90 or 39.97 on the ES are the closest because it's a 7-point difference right now. So there you go. 39.90 wins and tied with 39.97. You get to split the winnings. Yeah, don't spend it all in one place. So is it going to take off now? That's what I think. I think that we still have an hour left to this market in the future, so anything can happen. Almost an hour. All right, I am done. All right. So hopefully you enjoyed this show. And if you'd like to take part in the service, go down below in the description, 0-dte.com/try for a 4-week trial. And you'll be just like a regular member and have the opportunity to potentially make in one trade enough to pay for 2 years of this service. That's the deal. All right. And so now I guess it's time for the music. I want to thank everybody. Peace. I hope you all have a great weekend. I know that I plan on having a fantastic weekend, the wife and I. And good luck to you. Love you all. Peace. See ya. Music.